Uber's rallying, though, after an earnings beat, and revenue estimates also came in better, what it calls its strongest quarter yet. Total sales up nearly 50% from a year earlier as the rideshare service hit 2 billion trips in a quarter for the first time ever. The company posting a full-year net loss, but Uber's CEO telling CNBC earlier he's aiming for profitability this year.
Year before last, we talked about being EBITDA positive. We hit EBITDA positive ahead of street expectations. Last year, we said we'd be free cash flow positive. We got to free cash flow positive ahead of street expectations. This year, we're putting the marker. We are going to be GAAP operating profit positive. And, we'll hit it in due course. We're not talking, we don't want to focus on quarters. We want to focus on many years.
This ahead of rival Lyft's earnings after the bell tomorrow. Dan Ives of Wedbush joins us. He just reiterated an outperform rating on Uber, raised his price target to 40 from 38. So you're impressed with these numbers, Dan?
Yeah, look, I think Dara and team, they've talked the talk. Now they're walking the walk. In terms of profitability, you look at that EBITDA, that was a blowout. And you're really starting to see now that growth rebound. I'd say it's their best quarter, really since the IPO after what's been a rocky start. Feel like some green grass ahead.
Does it bode well for Lyft, or is that on a different track?
Look, I think Uber definitely has the opportunity because of the global scale. That's enabled them to sort of flex their muscles from an EBITDA profitability perspective, as well as even growth, because they got the delivery that continues to hold in there, I think, a lot better than expected. Lyft, it sets a high bar. I do believe Lyft will be better than expectations. And Sarah, I think when we take a step back, these are really under-owned names across the board. Many threw them out in sort of what we've seen the last year. I think now we're seeing a rebound in these management teams. There's adults in the room finally after a few years.
So, but if Uber is proving that it can get to profitable growth, has Lyft proven that yet as well?
Not yet. And I think that ultimately it set a high bar. Now, look, Lyft does have different levers. And because they're domestic, they don't have some other things that Uber does. And I think Dara has done a great job in terms of scaling things back. I think for Lyft, there's more and more pressure for them to cut costs. But that driver rebound is significant in terms of what we're seeing. And especially over the last few months in terms of major cities, we're seeing a significant rebound in terms of that travel return to office. And these ride-sharing players are really starting to benefit now, finally, post-pandemic.
What have we learned about Uber and Lyft's susceptibility to the macro environment? I mean, COVID was weird. It distorted everything. But now that, drivers are back, people are back, gross bookings are up, what have we learned about if there's softness, what happens?
Yeah, I think now we're starting to see different business models than even when you go back a few years ago when, obviously coming out of IPO, they're really disasters. Now the scale, cutting back costs, you could see that they can scale from a profitable perspective. And from a macro, holding in well because it's a duopoly, essentially. And that's important in terms of ride sharing. Can they raise prices? What does that look like in terms of demand? We're seeing demand hold in there, and that's super impressive, especially after what's been some white knuckle few quarters for both Uber and Lyft.
Do you say they're still under-owned? Why? What is the pushback you get when you talk to clients about these names?
I think many investors institutionally, they're just skeptical about their ability to further expand margins in EBITDA. Can they do it if there's a further price war? Many are snake bitten in these names because what we've seen the last few years. I do think sentiment's starting to change, especially more and more of a risk on across tech. You look at what Uber's doing here. It's still a cheap stock. I think Lyft's as well. Tide's changing, and I think that's really result driven in terms of it all starts today.
Got it. Dan Ives, thank you very much.